Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Wednesday the 15th of June. Now, we've had some significant moves in markets in recent days. I've got 3 charts which really do reflect that. I've got cable which is broken down. I've got the gold chart which is also starting to move lower, and the SP500 futures which has also seen a key downside break. Federal Reserve meeting, and it's going to affect all these charts, I think. Now let's get straight into it with this cable chart. We can see this move to the downside, some significant bear candles, 3 in a row, bang, 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 and this line here of broken support, 21.55. Well, I'll go on the weekly chart and show you the impact that that has had, because you can go all the way back to 2020, and basically was the initial COVID pandemic related breakdown, spiked lower, then rebounded and sort of bounced back up into the 20s again, but it's back below the 120 big figure yesterday level, and that has just decisively now broken the support, and effectively, wow, the next support doesn't really come in until 114 big figure. So this is significant. If cable starts to trade consistently below 120, that really doesn't look good, and the momentum for it is bad as well. We have this precedent on the RSI which got to the low 20s back in April, May. So there is still downside potential, and this overhead supply that we now have of the breakdown, 21.55, it had a go at a rebound, but effectively just formed resistance yesterday at 22.10 area. So there's basically 21.50 up towards 22.10 resistance on this cable chart for a rebound. Any rallies are a chance to sell on cable. It doesn't look good. If it fails in that, it really does look negative to the downside. Obviously, yesterday's low 19.33 initial support, but to be honest, further downside is likely to be seen. You're selling into strength within this downtrend. The gold chart has been moving sideways. It was very volatile on the back of the US inflation, spiked lower and then higher and then lower again on Monday. Big negative candle on Monday, and then decisively sort of confirmed the breach of the support. 1828, 1837 is now overhead resistance, overhead supply on a near-term basis. And it effectively really does open a retest of this May low, which was 1787. And if I again put on the weekly chart, you can see that that is the May low here. And you then start to look at this sort of mid 1700s as a potential. So 1750 up towards 1790 is a definite possibility now, especially given, back on the daily chart, the deterioration we've seen in momentum. The RSI moving below that 40 mark on the daily chart really does suggest sort of turning into a sort of a more negative configuration, more negative momentum, selling into strength. And that 1828 to 1837 resistance is really now in play, and we can see that on the 4-hour chart as well. So any recovery into that fails, starts to fall over, that is your selling opportunity, I would think, or the selling opportunity I'd be looking at as well. And that is where the positioning, I think, will be for now. Sort of downside moves with this continued dollar strength, interest rate, bond yields going higher, all adds up to gold negative, I think, at the moment. And moving finally onto the S&P 500 futures, again another market, a sharp move to the downside. What a sell-off we've had on Wall Street in the last sort of few sessions, last 5 sessions actually. It's all been negative, all downside. And again, the downside break of 3,807, which was the May low, was seen on Monday. And then yesterday, 3,804 was the reaction high, and that again, so it tested that old support, which has become new resistance, and fell over, and that again sort of just paints a picture of an increasingly negative outlook. And you can see this run of lower highs and lower lows. Again, I'd be looking at selling into strength on this. You've got the 3807 where the resistance starts to come in, but also you've got this gap that is open, and that's a bit of a sort of conflicting signal, really, because gaps do tend to be filled. So I think that means that there is resistance, really, 3.8 up towards 3.9 area. That reaction low of that, well, the gap sits at 3.895. So basically 3.8 and 3.9 is the resistance there. And I'd say any bull failure in that is a selling opportunity, because it looks as though the S&P futures are going lower. I think any rallies, looking at this momentum as well, any rallies, any unwinding moves are a chance to sell. So initial support yesterday's low 3705. The next reaction again on the weekly chart, well, we've got 3657 as that reaction low back from January 21. And again, these are all supports that could well just continue this sort of corrective move that we've got on Wall Street at the moment. And it just really does look pretty bearish at the moment for Wall Street. So I wish you good luck in your trading today, and I will speak to you soon. Thank you very much.